Welcome to Different Makes a Difference, where we discuss investment matters that matter to everyday investors. Join Odlum Brown's Equity Analyst as we examine pertinent topics in today's markets and look at things a little differently. Odlum Brown is an independent Canadian investment firm. We provide integrated wealth management solutions to help clients achieve their financial goals, and we've been doing so for over 100 years. Join us for some lessons we've learned along the way that can make a difference for the future. Welcome to another episode of Different Makes a Difference. My name is Laura McAleer. I'm the Communications Coordinator for our team of Equity Analysts at Odlum Brown. It's Easter time, and whether you celebrate or not, it means you've probably eaten a few chocolate eggs by now. So what better time to talk about the chocolate industry, and by extension, Mondelēz. You may not recognize that name, but you probably know its brands, such as Cadbury, Toblerone, Oreo, Chips Ahoy, Cliff Bars, and others. Mondelēz is a great business. It's a colossal snack foods company with global reach, and it's one of our favorites in the consumer staples industry. With me today is Stephen Boland, who has followed Mondelēz closely for more than 15 years. He's going to tell us more about the business and the specific attributes of what we look for in an investment. Welcome, Steve. Thanks for being here.
Thanks, Laura. Great to be here.
So you've covered Mondelēz for a long time. Tell us what you look for in investment and how Mondelēz fits that bill.
We often say we look for three things when looking at an investment. We want a great business run by strong management, and we want the stock to be attractively priced. Now, ideally, you get all those three things at once, but the reality is most of the time you have to make some trade-offs. So sometimes you pay a little more to buy a really great business or get exceptional management, but sometimes we'll recommend a good but not a great business if we believe the price is really compelling. In Mondelēz's case, it's a great business that's really well run and trading at a reasonable valuation.
You've just described Mondelēz as a great business, which, to be honest, vexes me a little because that word is so often used that it's almost lost its meaning for me. Can you be more specific? What does it take to be a great business?
Well, you're right. That word has gotten a lot of use, and it probably stirs up a lot more emotion than it once did. But when I think of a great business, I'm thinking of a business that earns a lot of money. It has a good profit margin, and when capital is invested in the business, the returns are high, and Mondelēz fits that bill. Now, a key is, can the great business maintain its high profitability? Because high profits tend to attract competition. So does the company have some sort of advantage that will keep competitors at bay? Now, in the case of Mondelēz, I think there's a couple in particular. They have really strong brands. You mentioned some of them earlier: Cadbury, Oreo, Cliff Bar. People have a connection with strong brands. They know what they're getting. They crave the brand. They feel there's no good substitute. And they're often willing to pay a premium for that brand. Now, in the food industry, there is a lot of private label competition. And by that, I mean store brands like President's Choice at Loblaw or Kirkland at Costco. But you don't see much private label competition in chocolate. People usually indulge as a treat, and they want the brands they know and love. Mondelēz has those brands, and they invest heavily to keep them strong. Now, another big advantage Mondelēz has is its distribution network. So Mondelēz's products are essentially everywhere: grocery stores, convenience stores, sporting events, vending machines. Most places you go, you're within arm's reach of a Mondelēz product. And the company is global. They sell their products in more than 150 countries, and they've been in some of those countries since the 1800s. So they've been building this tremendous distribution footprint for decades, centuries even, and it's not easy for competitors to replicate what Mondelēz has.
The 1800s? Geez, I didn't realize it was that long. So Mondelēz obviously has a formidable history, but what about its future? We're facing a lot of developments today that weren't around back in the 1800s. I'm thinking specifically of GLP-1 drugs for diabetes and obesity. Robert Kennedy Jr., the United States Secretary of Health and Human Services, has a mandate to make America healthy again. That desire exists here in Canada too. And we're seeing trends towards less preservatives, more natural ingredients in foods. There's deeper scientific investigation into the gut microbiome. What does all of this mean for a snack foods company?
Yeah, essentially you're saying Mondelēz sells junk food and there's a trend toward healthy.
Yeah.
Well, health and wellness is not a new trend. And think of all the dieting programs and fads over the years, the campaigns against trans fats and salt and sugar. This desire to be healthy has been around a long time, but Mondelēz has continued to grow. And they do that by paying attention to what's going on and adapting. So right now, a lot of people want to reduce sugar. So Mondelēz has zero sugar Oreos. You mentioned minimal and natural ingredients. Mondelēz bought a company that sells Hu chocolates. HU is short for human. It's a premium price product that focuses on natural ingredients. Well, calorie consumption is a focus for many. So Mondelēz has different pack and product sizes so people can portion control. So think Oreo minis, for example. Now, GLP-1 drugs like Ozempic, they've been around a while for diabetes, but they're relatively new for weight loss, and that is something worth monitoring. Some people are eating less snack food when on these drugs. Now, I've seen some different stats, but somewhere between 5 and 10% of American adults are taking GLP-1 drugs. Now, Mondelēz and some of the competing snack food companies have said that in aggregate, they're not seeing a noticeable impact on their sales volumes. But GLP-1 usage could expand. That said, when I run through the scenarios, I still see growth for Mondelēz. There certainly could be an impact from these drugs down the road, but it would likely be more than offset by other growth drivers. For example, more people are living on-the-go, busy lifestyles and seeking convenience. There's growth potential in emerging markets, and Mondelēz will adapt its products to what the consumer is demanding. When I look at RFK Jr., I totally applaud the idea of making America healthy. It's a great ambition, but it's also, I wouldn't say, it's not easy. Things like affordability and stability of food supply need to be considered. Now, one area we've seen them go after is certain ingredients like food dyes. Mondelēz does have some of those ingredients in its products. So Sour Patch Kids, for example, have certain food dyes. But Mondelēz also operates in Europe, and these ingredients have been banned there for quite a long time, and Mondelēz does just fine. So they can adapt their recipes in the US. Now, in some cases, that will mean a higher cost, which likely means higher prices to the consumer, but it's something they should be able to manage. And last point here, most people know what they're getting when they buy chocolate or a cookie. I don't think I'm getting something healthy. I'm buying it as a treat. And I think that desire for indulgence has longevity. And Mondelēz will simply have to adapt around that.
But clearly they're nimble and can adapt to the changes in their consumer desires. I imagine for that to happen, it's the management team that manages that. And you mentioned earlier that the management teams are a critical component. Tell me more about who's managing this company today.
Yeah, it's a great question. Management teams are really important. And in the case of Mondelēz, I think they have an excellent management team. They're led by CEO Dirk Van de Put. He's got a lot of experience in the packaged food industry. He joined Mondelēz 7 or 8 years ago. Before that, he was leading McCain Foods. That's the giant global French fry company that's based right here in Canada. I think Dirk has done a terrific job at Mondelēz. He's investing behind competitive advantage, and he's positioning the company for faster growth. So he's steadily increased investments behind marketing, and as we talked about earlier, strong brands are key. Increasing marketing can further strengthen those brands. He's investing to build distribution, particularly in emerging markets. I actually looked up these numbers before I came here today. In 2023, Mondelēz entered 120,000 new stores in China and 180,000 in India. That's a big expansion. They're now in more than 3 million stores in each of those countries. In hot climates like India, they've invested in little fridges so that stores can keep the chocolate from melting. Now, these countries provide a big opportunity for growth because consumers in most emerging markets eat a fraction of the branded snacks that we eat here in Canada. They've also, under Dirk Van de Put, done a really good job with acquisitions. So, for example, they bought Ricolino, and that's a confectionery company in Mexico. That really expanded their reach into small mom-and-pop shops. So, once again, getting their product in front of more consumers. And they did a similar acquisition in Central and Eastern Europe. They've built up their snack bar business. They bought Cliff Bar a few years ago. And they've expanded into packaged snack cakes and pastries. And that's a big category. It's growing. There's lots of opportunity to take share from small competitors. And Mondelēz is buying good brands like 2-Bite Brownies that they can expand through their distribution network. Now, last point, this is really important. They've paid really good prices for their acquisitions. It's like buying stocks. You want to buy something good, but you don't want to overpay. And Mondelēz has done a really good job being disciplined on the price.
Great. So let's talk about chocolate as an agricultural product for a minute. And most cocoa these days comes from Ghana and the Ivory Coast. Now, the cocoa industry in Africa has been flagged for human rights abuses. And Mondelēz and Nestle both state that they are fair trade, and each has developed their own independent sustainability programs to improve the working conditions for their farmer partners. But there have been compelling reports in the media that they and other big commodity companies are contributing to an environment and forces farmers to rely on child labor. What do you say to investors who might be concerned about such potential unethical business practices?
Well, that's a really good question and a very important one, though it's not an easy one either. Look, I don't want companies engaging in bad behavior. I say that from a moral stance, but I can also look at it from an investment lens. And we often say doing good is good business. And that's especially true when you're selling a brand. It's a really difficult thing to monitor. We're sitting here in Vancouver. We're not in the cocoa fields in Africa. And I know there is some bad history in this industry. There's been progress, but there's still work to be done. Now, Mondelēz, they don't operate cocoa farms, but they are a big buyer, so they can have sway. And I think they're making a conscious effort. They have a $1 billion initiative over multiple years to improve labor practices in the supply chain and incomes and help the environment. And they regularly update their progress. Now, you might say, well, are they just talking a good game? But in my years covering the company, management seem like decent, honest people. We can look at incentives. Certainly, there's an incentive to keep costs down, but there's also a really big incentive to protect the brands. Bad behavior surfaces, the brands can be damaged. And with the reach today of technology and media and social media, it's harder to hide bad behavior. And that's a really good thing. Now, I still do hear stories from time to time that I don't like, but the big players can have an impact. They have the resources to make a difference. And I hope Mondelēz is, and I hope they keep moving in a positive direction. And quite frankly, as consumers, we can send a message to companies through what we say and what we buy.
Having a positive influence in the world around us is important to us at Odlum Brown with the community events that we do, and we hope that the businesses we recommend have that same drive. Now, the third attribute that you noted when looking for stocks is a reasonable price. I'm curious, what's the valuation today? How do you feel about the price today of Mondelēz's stock?
Well, I wouldn't say the stock is a rock bottom price here, but it is a fair price for a very good company. The price to earnings multiple, it's roughly in line with the S&P 500, and that's the broad US index. And it's below some other higher quality consumer staple companies. And Mondelēz's earnings are a little depressed right now. So on more typical profit margins, the valuation multiple is lower again. Now, earnings have come under some pressure because of cocoa prices. And as you mentioned a short time ago, a lot of cocoa comes from Ghana and the Ivory Coast. And there's been bad weather, and there's been plant disease, and that's led to bad crops. And when supply for a commodity comes under pressure, prices go up. And in the case of cocoa, prices have gone up a whole lot. Now, if we get better supply, prices should come down. And Mondelēz is working to improve even if prices don't fall. So ultimately, their profit margin should rebound. And in the meantime, this challenge has put a little bit of pressure on the stock. And that's the way it kind of goes with valuation. You tend to get a better price if something isn't going right. So the time to buy good companies is usually when there is some temporary pressure. If we think about the return potential, Mondelēz aims to grow its earnings per share at a high single-digit rate every year. Some years they'll be a little above, some years they'll be a little bit below. But over time, that's what they aim to do, and they've done that historically. I said the valuation multiple is reasonable, so if that multiple stays the same, the stock should go up with earnings growth. And it pays a nearly 3% dividend yield. So in a world with a lot of uncertainty, that's a pretty decent setup for a big, fairly stable, strong, well-managed company like Mondelēz.
Well, that's great. So before I let you go, just a question for fun. What's your favorite chocolate?
Well, you get a shorter answer if you ask me what chocolate I don't like, but I really like some of those chocolates that have other treats in the middle. So Cadbury with the Oreo filling, or last Halloween, I actually discovered these Cadbury blocks that have mini eggs in them, and I took a real liking to them. When I go outside Canada, I often look for rum and raisin. I actually find that really hard to get here in Canada, but I sometimes gorge a little when I'm overseas. How about you, Laura? What were you eating over Easter?
Well, I don't have a huge sweet tooth, but I am a sucker for Purdy's dark chocolate gingers. And some of our listeners might recognize that brand. They're a family-owned Canadian chocolatier that began right here in Vancouver back in 1907. So another company that's been around for a while. Honestly, I think their dark chocolate gingers are the best I've ever had. So, well, thanks so much, Steve, for this. I think it's important for people to know more about the industries that we like, and even more so to understand the qualities that we look for in the businesses we cover. And I really appreciate you taking the time to walk us through all that with Mondelēz. So to our listeners, if you enjoyed the show, please like it on whatever platform you use to follow podcasts and share it with others. Thanks so much, Steve.
Thank you.
Thank you for listening to another episode of Different Makes a Difference. Just as every individual is unique, so are your financial circumstances. Be sure to talk to your professional advisors for advice related specifically to you. Our podcast is for general information purposes for Canadians only. The views expressed are those of the presenters and may not reflect the opinions of Odlum Brown. Be sure to check out our full disclaimer and subscribe to the podcast at odlumbrown.com/differentmakesadifference. Odlum Brown is a member of the Canadian Investor Protection Fund.